at the start of the G20 meeting when we spoke, you said that you expect the Fed to move 100 basis points this year. Is there clarity on how fast the Fed would move in 2022?
We do understand every central bank in making the decision of the monetary policy need to be based on the available information, that data dependent, and we are pleased that the Fed doing so and well calibrated, well planned, and well communicated, so that the market understand, and also all of us central bank around the world, especially emerging market and developing countries, also understand and taking into account in our policy decision making. As we also see the plan of Fed fund rate increase, Bank Indonesia forecasted 4 times already also being priced in by the market. As we see, U.S. Treasury increase to 1.8, 1.9, and also in us, we also able to respond that to make our also movement and government bond yield, as well as manage our exchange rate. And Indonesia is quite doing quite well. Yield government bond also a bit increasing, and exchange rate is quite stable.
Right. So, Governor, you're keeping to your estimate of 100 basis point hike by the Fed. Is that right?
Until now, we still do believe 4 times, but of course we will listen carefully what the Fed will be communicating.
And to that end, the Fed has said that it is willing to hike rates as many times as needed to contain inflation. Are you ready to hike rates?
While our interest rate policy is still holding 3.5% because, Hacienda, in Indonesia, inflation is still muted. It's very low because our output gap is still negative, rate stable, inflation expectation is also well anchored. So that I think the fundamental of the inflation is still muted. I think that, but of course, during the course, I already saying if there is early sign of the inflation pressure, fundamental inflation pressure, then we will calibrate again.
How much must the rupiah drop for Bank Indonesia to hike rates to defend the currency?
To the contrary, our exchange rate is stable and even appreciated because fundamentally the factor are positive, supporting our exchange rate stability and also making positive exchange rate. Just let's do the metric. Trade balance is surplus. So fundamentally, I think support positively our exchange rate. Current account is very low. This year, we're expecting minus 1.1 to minus 1.9, which is historically low for Indonesia. That's reason number one, fundamentally. Second, we ensure the yield differential continue attractive for foreign investor. That will be number two. And of course, more, deepening our FX market. Domestic and non-delivery forward is an instrument for hedging, both for investor as well as a domestic player. And last but not least, our commitment to ensure our exchange rate stability. So all of the factors are positive for exchange rate. Hacienda, I think that's the signal that I want to send to you.
Are hikes independent of the RRR increases?
Well, our interest rate policy decision is based on our forward-looking forecast of inflation vis-a-vis growth. Remember, our inflation this year continue to be low. Why? Our output gap is still negative, meaning fundamentally that there is no reason to respond to interest rate. Yes, next year and following year, when our domestic demand increasing, there is a possibility that the output gap becoming positive. That's why we do preemptive, a forward-looking respond. That's why I was saying along, has been saying over and over again, we will start reviewing our interest rate policy at the earliest of third quarter this year. Not because our inflation will be high this year, but because next year and following years, maybe there is a pressure of the inflation.